the AI bubble. It's all anyone's talking about right now, at least that's what it seems on social media and pretty much every news website going. People are searching for it too, with Google search interest for the term AI bubble exploding since August. And honestly, I get all the noise. US stocks do seem expensive, price-to-earning ratios are above historical averages, big tech is pouring billions into AI with no guaranteed return, tech stocks are swinging all over the place, and the VIX, Wall Street's fear gauge, has been spiking. So I do understand why everyone's been shouting bubble. But in this video, I'm going to tell you why I don't see this as some big AI bubble, and frankly why I'm not worried. Before we get into that, XTB currently have a great sign-up offer where you can get a free stock using my link in the description and the code Finch. Thank you if you do use this, as it really does support the channel. So why don't I think there's a bubble? Well, let's firstly take a step back and talk about what most people actually mean when they say there's a bubble. It usually comes down to two questions. Firstly, is the market about to drop massively? And secondly, should I sell now to avoid losses? Both of these are short-term questions, and to me the whole idea of a bubble completely comes down to whether you're a short-term or a long-term investor. In the short term, sure, the bubble analogy works. There's been plenty of times before where the market has dropped massively, more than 20%, when stocks have seemed overpriced. In fact, between 1972 and 2022, the global stock market dropped 20% 8 times, and it will likely happen again. In my lifetime, I'm expecting multiple 20% plus drops. But here's the thing, even with all of these drops, I'm still not seeing bubbles. And that's because I'm looking at it with a long-term lens. If you zoom out and take a look at the market performance over a 10-year plus period, then the bubble analogy just falls apart. Markets have always recovered from every crash and every scary news headline over the long term. Take the S&P 500 as an example. The dot-com crash looks huge on a 5-year chart. It felt like the end of the world, and that's how the news made it seem. But zoom out, and it's a small dip on an otherwise upward trend. Historically, there's never been a bubble over the long term, only short-term drops, as the market has always recovered. Of course, history is no guarantee, past performance doesn't guarantee future results, and this time could be different. But history is one of the best things we've got to go off, and this whole bubble popping, everything resetting to zero analogy just doesn't line up when you look at historical data. For me, the market is more like a ladder. At the moment, it's very shaky, and at some point we will fall down a couple of steps. But over the long term, we'll climb back up those steps and keep climbing to new heights. I do know that people are going to come back to this video when the market drops and say, I told you so, there's no ladder, only bubbles. But when the market then recovers months and years later, I'll be back again to comment on those comments if YouTube still exists at that point. So let's finish the video by going through what I will do if and when the market does fall by over 20%. I've said that I do expect drops in the short term, and you can probably guess what I'll do. I'll stay invested, I won't sell, and I'll dollar cost average my investments every month. I'll just carry on doing what I'm doing at the moment essentially. I could try and time the market, and that's what many people will likely be thinking right now. Should I sell now before a big drop, and then buy again when the market is at its bottom and enjoy the ride upwards? This sounds great on paper, and it would lead to good profits, but it's incredibly hard to do. It's incredibly hard to time the markets, as they're very unpredictable in the short term, and if you sell now and time it wrong, then you could miss out on being invested on the best market days. Historically, the best and worst trading days happen right next to each other, and miss just a few of those good days, and your long-term returns get significantly dented. So instead, I'm going to focus on time in the market over timing the market. I'm going to keep it boring and just invest every month, the same day every month, without fail, not hitting that sell button, no matter what the market does, no matter how bad the market gets in terms of dropping, and no matter how scary the news headlines are. That's my long-term plan. And I hope you enjoyed this video, and let me know what you think about the AI bubble, whether you think my long-term outlook is a load of nonsense or whether you agree with it. Let me know in the comments. Thanks for watching.